Hello everyone. We would like to introduce you to Credit Wallet. Traditional credit cards combine two parts, a payment network and a revolving credit line. The payment network allows the consumers to purchase goods and services using a convenient tool and avoids cumbersome alternatives, cash or check for example. But the current credit card system is highly centralized, opaque for most parties involved, non-inclusive, crowded by many stakeholders. So, what is Credit Wallet? Credit Wallet is a peer-to-peer revolving credit line network aimed at financing consumer purchases. A crypto credit card network to replace traditional credit cards in the crypto economy. A business case that combines the concepts of crowdsourcing. Its core features are, it has a settlement and payment system based on a first-layer blockchain solution. We might also consider a high transaction throughput sidechain at a later stage to reduce transaction time and minimize transaction fees. It is designed from the ground up to redistribute the reduced fees and interest involved, by replacing third parties with smart contracts. It incentivizes both honest borrowing and lending. It creates an open ecosystem that allows for value added by third-party intermediaries to provide value-added solution to our users. And finally, it includes a native Credit Wallet mobile application. So, how does the Credit Wallet actually work? First, we make sure our users go through proper onboarding procedures. Depositors will register with a third-party Know Your Customer, anti-money laundering service provider. The provider will use a zero-knowledge proof's identity. In addition, the same third party will act as a credit rating agency which will score the potential borrowers based on their social media activities and SMS phone data and will control if they are already registered with different rating providers. The network will use the credit score to assess if and how much credit line is provided to the cardholder. Third-party services will be paid a fixed fee per new user and will risk exclusion from the system and legal considerations in case of dishonest credit scoring. Let's see how the Credit Wallet works from the depositor's side. They deposit the amount they want to invest into the app. The amount is directly included in the deposits pool and locked for a period of 1 month. The depositor pool will provide liquidity in case the depositors want to withdraw their funds post the lockup period and will allow for the diversification of default or delinquency risks. All depositors have the same interest rate, but this will be adjusted in the future with the increase of adoption and liquidity. At the end of the period, their funds are released along with the interest they have earned. Depositors will then have the option to automatically reinvest their amount or decide if they wish to do so manually. Now, let's see how Credit Wallet works from the cardholder's side. The cardholder will receive a wallet with a pre-assigned credit line determined by the credit score they received. The cardholder can then send payments to in-network and out-of-network wallets in exchange of goods and services. To make a purchase, the cardholder signs a payment. Once this payment is signed, the smart contract automatically withdraws the amount from the depositor's pool, then executes the signed payment to the merchant. So why do we need a native wallet mobile application? The application will show current credit used, maximum credit available, details of payments made. At the end of the period, the wallet will determine the amount due including principal repayment, interest due and any possible fees, then notifies the user accordingly. The application will also function as a wallet, storing the user's access and giving the ability to sign the transaction for the smart contract. Once it receives the amounts due, the wallet will split the funds and send them to their appropriate destinations. Principal repayments go back to the depositor's pool, the interest is reduced by the default reserve and then sent to the interest wallet. The transaction fees are sent to the address where we accumulate the user's transaction fees. The merchant wallet will transfer the merchant transaction fee to the address where we accumulate the merchant fees. It will also provide the merchant with details about the transaction history and other general insights if needed. In case of default, the smart contracts will release the information that allows for decrypting the private information of the borrower and sends that info to collection agencies. So, who is going to do all this? Let me introduce our team, starting with our CEO, who has more than 25 years experience in the traditional consumer credit industry and who has recently completed a Master's of Science in Digital Currencies from the University of Nicosia. He will be assisted by an experienced CTO who has extensive experience in Solidity, the programming language used to build smart contracts on the Ethereum network. The company's financial will be handled by a finance director with more than 20 years' experience in the finance department of major financial institutions. He is a chartered public accountant and has previously worked as an auditor at one of the Big Four. The compliance officer who will handle the relationship with the third party providing KYC/A.M.L. services. He will also handle the zero-knowledge proof of the onboarding mechanism. Our compliance officer has more than 20 years' experience working in the financial services industry. Our advisory board is made out of C-level executives in the consumer credit sector who have extensive knowledge and experience which our company can't tap into. The advisory board also includes key figures in the digital asset and blockchain community who can add much needed value to our project. Our executives will be supported by a strong team of system architects, software developers, full stack, Solidity and web services, business development teams, digital marketing experts and other admin functions. And what about our competition? There are a few competitors that we are monitoring closely. These include 3 groups. Traditional credit cards, being Visa, MasterCard or the other players in the market are not considered as direct competitors to Credit Wallet as they act solely in the fiat ecosystem. While we are crypto-based credit line providers, we actually learn from these networks, applying their successful strategies and avoiding their mistakes. Crypto debit cards, these are existing debit card which allow the user to make fiat payments using the balance in their crypto wallets. These do not yet provide credit lines, although some might be considering it. We do hope being first to market will provide us with a lead time to gain market share and make it harder for them to keep up. Lastly, the micro-lending companies that provide microloans to users for their consumer purchases. These are mainly loans that have a specific repayment schedule and not credit lines which are similar to current credit card mechanisms. They lock the users with a predefined schedule. We have identified 5 critical factors: adoption by user, onboarding of merchants, maintaining delinquency rates at an acceptable level, the zero-knowledge proof identity to be accepted by the regulators, smart contracts to be developed correctly and their security audits having no issues. Thank you for your time. We hope you like our Credit Wallet project and our presentation.